Today, I'd like to explore a topic that's reshaping not only the future of technology, but also the foundation of our economy and investment strategies. That is artificial intelligence. At Vanguard, we see AI as a part of a broader set of forces, megatrends, that are quietly but powerful redefining the global landscape. To understand where we are headed, we need to look at the long-term forces we call megatrends. These are structural shifts that evolve over decades and influence how economies grow, how markets behave, and how investors succeed. The 5 megatrends we focus are technology, demographics, fiscal deficits and debt, globalization, and geopolitical risk. These megatrends drive the economic and financial outcome that matter to individuals, investors, and policymakers. We call these outcomes the Big Four: GDP growth, inflation, interest rates, and stock market valuations. Over the last 130 years, megatrends have driven about 60% of the variation in GDP growth and market valuations. The next decade will be shaped by a tug-of-war between two dominant forces: the promise of AI and the pressure of demographic deficits. If AI succeeds, it could catalyze a surge in productivity, offsetting the economic drag on an aging society. If it fails, deficits will dominate, growth will slow, and markets may struggle. Vanguard outlines 3 scenarios. First, AI fails. Growth slows to around 1% annually, deficits rise, and inflation-adjusted returns remain near zero. 2. Status quo. Growth continues at around 2%, similar to the past decade. And 3. AI transforms. Productivity surges, growth reaches 3%, and markets respond positively. The most likely outcome, according to our model, is the third. AI becomes a general-purpose technology, reshaping industries and boosting productivity. That said, not all technological advances are equal. Vanguard's research identifies 3 drivers of technological change. First, augmentation, where technology helps humans work better. Second, efficiency, where automation replaces manual tasks. And 3, transformation, where general-purpose technologies like electricity or AI reorganize entire economies. These drivers tend to arrive in waves. First comes transformation, then efficiency gains, and finally augmentation. AI has the potential to follow this pattern, but it may also trigger a temporary dip in productivity, a J-curve, before its full benefits are realized. So, what does this mean for investors? Whether AI delivers or disappoints, the next decade will be different from the last. Interest rates are likely to be higher, the forces shaping our economy more complex. To navigate this environment, Vanguard's 4 investment principles offer a timeless guide. Goals: start with a clear, achievable objective. AI might reshape industries, but your financial goals should remain grounded in what you need to accomplish. Balance: maintain a diversified portfolio. AI's impact won't be limited to technology. Sectors like energy, industrials, and healthcare might also benefit from AI-driven productivity. A balanced mix helps you capture opportunity while managing risk. Costs: keep expenses low. In a world of uncertain returns, controlling costs is one of the few levers investors can rely on. Discipline: stick to your plan. Markets may react sharply to AI developments, both positively and negative. Discipline helps you avoid emotional decisions and stay focused on long-term success. The stakes are high. If AI prevails, growth will accelerate and markets may thrive. If deficits dominate, growth could stagnate and inflation may rise. Vanguard's research suggests that technology will likely prevail, but success will depend on how well we adapt, not as just workers and policymakers, but as investors as well. Preparing for this future means embracing uncertainty, staying informed, and building portfolios that are resilient, flexible, and aligned with long-term trends. Let's make sure AI helps not hurts our financial future.